Well, good morning, everybody. It is a real pleasure to have all of you here today and appreciate you taking your time out of your day to listen to our webinar. We have an exciting webinar planned for you today and kind of could give a scope of kind of where we sit as far as the state of fintech is concerned. And so for many of you that know, my name is Penny Lee, President and CEO of the Financial Technology Association. We are a Washington, D.C. based trade association representing leaders in the future of finance. And today we are pleased to have several of our member companies. We have Betterment, Cash App, Intuit, Plaid, that are going to be walking through, Plaid and the Harris poll are going to be walking through a real timely poll that gives insights and snapshots into kind of how consumers are using financial technology products, what their expectations, and how it is saving them time, saving them money, and making their lives more efficient. And so with that, I'm going to be turning it over to Ben White, policy lead at Plaid, and Abby Looney, managing director at the Harris poll, to walk us through kind of what their recent findings are. And then afterwards, we're going to be doing a Q&A with several of our panel members. And then we will open it up to the audience for a wider Q&A as well to allow you all to answer questions that you might have. So with that, I'll turn it over to Ben and Abby.
Thanks so much, Penny. Good morning, everybody. Thanks again very much for joining. As mentioned, I will be walking us through some findings from a series of consumer surveys that Plaid has commissioned from the Harris poll over the past 3 years. So we've called this overall project, which has produced 3 separate reports, the Fintech Effect. We've run an annual survey each of the past 3 years in 2020, 21, and 2022 to understand consumers' use of fintech, the trends around their usage of financial technology apps and services, the impact of those services on their financial lives and lives more broadly, and some of the motivations behind why they want to use those tools in the first place, and what are the features of those tools that they seek and that keep them coming back. I will clarify, for the purpose of these findings, we did intentionally cast quite a broad net in terms of our definition of fintech. We described fintech as the use of digital apps and services. So just wanted to be clear when we talk about these findings that while we get deeper into use cases, this is pretty broadly defined in terms of consumers' overall behaviors in terms of moving their financial lives online. So I'll start by walking us through some of the trends over the past 3 years, starting in 2021, where we saw in our initial survey, 6 in 10 consumers saying that they are using financial technology tools, and on average, them using around 4 of those applications. Again, these can be mobile, they can be online, but the defining characteristic is that they are digital financial tools. Then between 2020 and 2021, we saw a really tremendous spike in adoption from 58% up to almost 9 in 10 consumers answering affirmatively to that question, are you using digital apps and services to manage your money? While we saw that number taper back just slightly between 2021 and 22, it showed real staying power and enduring in the post-pandemic era, with consumers using even more applications on average. And finally, just around half of Americans reported in our survey that they're using these tools every single day, pointing to this being the new normal for how American consumers are managing their money. Taking a deeper look into a variety of use cases that we drill down into, of course, in those high-level numbers, that 80% of overall users in the past year, there are a wide range of use cases that consumers are engaging in. Payments apps have remained the top use case year over year, even seeing an additional spike between not just that 2020 to 2021 pandemic year, but even in the post-pandemic era continuing to rise, leading even some of the more traditional uses of digital banking services, like paying bills through a bank website or online-only banking. Additionally, other use cases, including lending and investments, continue to show steady growth in terms of consumers adopting and continuing to use those services primarily online. So really what we see across the board is a continued rise in adoption across a variety of use cases. And now I'll hand it over to Abby Looney, who's joining us from the Harris poll, to take us even deeper into some of those impacts and motivations.
Thanks, Ben. Good morning to everyone. My name is Abby Lunny. I'm the Managing Director of Thought Leadership at the Harris Poll, and I'm excited to share with you some of the findings from this year's Fintech Effect survey. Just to ground you guys in the methodology, this study was conducted over a 2-week period in 2022 among a nationally representative sample of 2,000 Americans. This research was also conducted in the UK among a similar audience. However, today we're going to focus on the US findings. However, if you do have more interest in digging into the UK insights, I would highly recommend taking a look at the white paper, which has a lot of great findings to dig into there. So let's jump into the impact that we saw with fintech. One of the really interesting trends that we saw this year is a convergence of fintech across demographic groups. This is really common across industries that are starting to become more mature and move past that early adopter phase, like we saw in that trended slide, and get to a more sophisticated routine user base, right? So our initial study 3 years ago showed that higher income households were stronger fintech adopters than lower income. However, this year's report paints a more equal picture. Fintech is boosting financial confidence for lower income individuals. It provides transparency, automation, control that can help with strategic planning and avoiding penalties like late fees. And we see that this translates into a real emotional halo effect for people. They feel that it helps them build better financial habits, simplify their money management, build financial confidence to an increasing degree compared to previous years. We also see that gender is showing a similar trend where men and women are using at similar rates. From a racial perspective, Black and Hispanic people continue to use fintech at the highest rates compared to white and Asian Americans. This is very common when you're looking at industries where digital tools provide new ways to access technology or industries that might have been harder to reach for them before. A second really important pillar of the impact that we're seeing is what it means in our current climate, right? There's a lot of economic certainty right now, and digital tools really are helping people navigate it, right? So you can see from these numbers on the slide that strong majorities of Americans say that the always-on access fintech provides has helped them to navigate challenging economic times. And in fact, that the current economic climate is making them even more dependent on this technology to make informed decisions, right? As things are changing at a faster pace, people want to stay informed. Lastly, we see that tools that help Americans organize their financial picture and strategies, like budgeting apps, are essential to weathering the current economy. Our third pillar of impact that we're going to look at today is the benefits, right? How does fintech contribute to people's lives in a positive way? And this year we saw that 93% of fintech users say that fintech has helped them in some way. That's the highest we've seen in 3 years. And when you dig into what those benefits look like, saving time rises to the top of the list as digital tools, enable more seamless transactions, less in-person time, et cetera. But many have also been able to save money as a result of employing fintech. Maybe that's from automating savings with a roundup program, or avoiding penalty fees by being able to automate payments. We also see that psychological benefits abound. So nearly half say that using fintech has helped them feel more in control of their finances, providing visibility into their financial picture. A third say that it has helped them reduce fear and stress around money. And a similar percentage say that these tools have helped them recover from a financial mistake, maybe improving their credit score, avoiding late payment fees, those kinds of things. And ultimately, we see that around 3 and 4 say that using fintech helps them build healthier financial routines and habits, which is, sets them up to feel more sound in their financial decisions, to have peace of mind, peace of wallet for a long-term outlook. When we look at the motivation for using fintech, right, as Ben mentioned, sort of why are people leaning into these tools? What is the value prop for folks? And digital tools really help to paint a clearer picture of people's finances. And that is something in the current environment that consumers are really looking for. We're seeing a rising trend across all of our research of a greater emphasis on sort of smart spending, smart money management, wanting to feel like a smart consumer. So about 8 in 10 of our respondents told us that this past year has made them more focused on their finances. And we see this across research in other capacities, right? People started holiday shopping in September so that they could spread out their spend. We've seen a rise in couponing, and fintech is no exception because it taps directly into this need for more control, for greater transparency, because it's convenient, it's real time, it puts people in control. And we see that reflected in the top reasons for use. One other interesting finding about these motivations is that young people are more likely to tap into fintech for social purposes, for example, using Venmo to split the bill with friends.
Thanks so much, Abby, for sharing those really fascinating findings. Obviously, these tools are becoming more mainstream, and consumers are generally getting more and more comfortable managing their finances digitally, but they also have new motivations around their use of those digital tools. And paramount to those motivations is data privacy. Among the key findings that we learned when we asked about consumers' motivations and priorities as it relates to privacy is that around 8 in 10 consumers say that when they choose to share financial information with fintech companies, which in many cases is a core requirement to using those services, they want to know who is responsible for managing their data. Similarly, it's not only wanting that awareness, it's actually feeling a stronger connection to that business and feeling more trust in that company providing the service. 3/4 of Americans say that they have more trust in financial companies when they clearly articulate their privacy practices. They don't want privacy to be hidden away somewhere. They want to have full awareness and visibility into those practices. And sort of in the middle of those two concepts is this idea of control of one's financial information, with 83% of Americans saying that they prefer to choose where they share their data as opposed to having companies share it for them. So taking all of these great findings into account, what does all this mean for the future of finance? From the trends, we saw that fintech is the new normal. This is how consumers go about their everyday finances today. We see that there is real impact from consumers' use of these tools across a range of value, not just saving time and money, but emotional benefits as well. But in order for consumers to keep using those tools, they really prioritize trust, transparency, and control. And those are resulting in a real evolution in consumer needs around personal financial data rights being a real core element to consumers' engagement with their finances going forward. So with all those findings, I'm excited to hand it back over to Penny to now guide us through the panel, where we'll hear more about reactions to the data and thoughts about this future.
Ben and Abby, thank you both so much. I really appreciate sharing with us the findings in this comprehensive study, and really seeing kind of where the adoption is going, but also the important point that you just made: trust, transparency, and control are really paramount priorities for consumers. So today I'm excited to open up the discussion. We have 3 terrific panelists with us. We have Amina Ross, Head of Policy at Cash App, one of the platforms where anyone can easily spend, save, and invest their money. We have Raul, with Chief Communications Officer at Betterment, the leading digital investment advisor in the United States. Betterment makes life better for its customers through low-cost, expert-built investing portfolios and saving products. And lastly, we have Sarah Paul, Director, Global Policy and Regulatory Affairs at Intuit. Intuit serves more than 100 million customers worldwide using TurboTax, Credit Karma, QuickBooks, MailChimp, many of the names that you might be familiar with, helping customers also save time, money, and ensuring they have the complete confidence in every financial decision they make so they can focus on what matters most. And so I want to open up the panel with just a question for everybody. As we saw in the survey, that fintech adoption rates has really equalized across gender, race, and income levels. And would love to hear from each of you. What does that tell us about the ways in which fintech increases financial services? Start with Sarah.
Great. Thanks, Penny. And this is a great question. And honestly, too often people view managing their money with a certain amount of uncertainty, but there's really no reason for that. The most important customer benefit that Intuit and other fintech companies can deliver is access to expertise, tools, and resources that give people the power to manage their money with confidence. Fintechs are democratizing financial services that are usually only available to a few people, but providing access to everyone to opportunities to improve their finances. They're really putting technology on the side of consumers and small businesses in order to solve their biggest problems.
Great. Amina?
Oh, thank you, Penny, for that question. I think, the research that we just heard about makes the answer really clear. FinTech is making financial services more accessible to people across the board. I think all of us have had the frustrating experience of trying to stop by a bank branch after work to deposit money prior to it closing. Cash App customers can deposit money at local stores like 7-Eleven or Walgreens. That's just one example of how FinTech is really creating an opportunity for folks to have access to their money, for their money to be more relatable and available to them.
Great. And Raul?
Thanks, Penny, and thanks for having us all today. And it's great to see so many people joining us as well. Thank you for joining us. Yeah, I mean, I think the accessibility point, the ease of understanding how money moves, the ability to deploy educational tools to a wide audience, so that it is easy to navigate. It's not confounding to understand how to build wealth, how to build savings, and where your money is at all times. Is really, really a benefit that all of the panelists companies bring, and this industry as a whole brings to consumers.
Great. I'm going to go to some specific questions. Amina, we'll start with you. You have seen the rise or the adoption of Cash App. You are expanding services as well with the new Cash App Save and some other monies. Would love to have you explain kind of what a user experience is with Cash App and how they can use it to better their financial well-being.
Yeah, so Cash App is an easy way for people to store, send, receive, spend, and invest their money. Our platform provides a variety of personal finance tools, from peer-to-peer payments, direct deposit, helping Americans prepare their taxes for free, investing in the traditional stock market, and Bitcoin. Last year, we also welcomed Afterpay into our suite of products, which provides our customers with payment flexibility through buy now, pay later. And we're pleased to announce we just launched Cash App Savings last week, which gives customers tools to automate their savings over time. So giving people kind of a wide variety of options depending on where they are in their financial journey to manage their money the best way for them, their families, and their community.
That's awesome. And for Raul, we heard Sarah's talk about the democratization of financial services. And I think one of the areas that we've really seen that is in investing, to be able to open up the investment platforms for retail investors and not just institutional. Can you give us a little bit of insight as to why people are attracted to a Betterment and kind of how you are helping that overwrought word of democratization, but how you're opening up investment vehicles for the everyday consumer?
Sure. Thanks for the question, Penny. It's a really, really important one, and one that we here at Betterment have been working hard on since we launched our first portfolio to the public in 2010. First of all, I would say that the poll data that was just shared is a terrific backdrop, and I think all of us see a lot of commonality in our own users' experiences through that data. But for us, we feel that digital apps expand access because they're easy to get into from any device. As others have said, are available 24 hours a day, 365 days a year. You don't have to go to a specific physical place. And importantly, they can be constantly updated with the latest security tools. For us, investment educational resources and content and suggestions, investing suggestions to help make an individual's investing journey both delightful and informative. So we here at Betterment, we focus on long-term investing in low-cost portfolios. We don't do single stock trading here. It's very much about long-term wealth creation. And we also use digital tools to help investors stay on track to reach their investment goals, whether that is saving for a holiday or child's education or their retirement. So we do the hard work. So building wealth does not require a finance degree or hours and hours of personal time to create a plan and stick with it. And that has brought hundreds and hundreds of thousands of Americans to our platform over the last 12 or 13 years.
Great. And Sarah, for you, you have at Intuit, a suite of services, all various different means in which to help businesses, small businesses, consumers, and other budgets save their money. As we saw, 61% of Americans are relying on these financial tools to help them better budget and weather economic changes. Would love for you to talk about kind of how that suite of services from Intuit does work and help people take better control of their financial lives.
Great. Thanks, Penny. And as you mentioned, just kind of in the introduction at Intuit, all of the work that we do really starts with our mission of powering prosperity around the world. At the heart of our work, we focus on delivering 3 core benefits: more money, less work, and complete confidence. And our suite of products allow consumers and small businesses to see a fuller picture of their financial life. 2 key examples of how we're helping consumers and small businesses navigate economic changes are helping them save time and money by using things like, first, cash flow predictions to help small business owners understand what they have coming in and going out, avoiding shorts. QuickBooks uses a cash flow forecasting tool that makes accurate, personalized cash flow predictions. Our predictions empower small businesses to determine whether this is the right month to hire more employees, invest in some sort of new piece of equipment, ramp up production, or take certain measures to avoid any payroll shortages. Another example, and one that many on this webinar are familiar with too, are one of the largest pain points for small businesses, namely access to capital. Many small businesses are underserved by traditional lenders and banks, honestly, because they haven't been in business long enough. They've been in business less than 2 years and really lack the revenue or credit history to gain access to the capital they need. But by harnessing the power of AI, we can analyze business accounting and banking data to underwrite businesses that are perceived as riskier by traditional lending institutions. Because we're able to historically see in real time what is happening with businesses through our data, we're able to more accurately assess a business's creditworthiness and offer funding to the most underserved small businesses. To date, QuickBooks Capital has helped serve over 60,000 small businesses with more than $2 billion in loans through our lending program.
That is an amazing statistics, and thank you for all of the work, incredible work with the small businesses in particular. I'm going to open it up just for one more question, and then we'll open it up to the audience, and that is, last week we saw a submission for people to be able to comment on the 1033, what we're calling 1033 rulemaking. And this is the ability for consumers to, or the right for consumers, the stated right for consumers to be able to have control of their data and being able to access and share it. Talk to us a little bit about what that means to have that personal data privacy right put into more of a formal rulemaking as we see the CFPB work through that, and how that will, what that would mean to your individual companies. And so I want to start with Amina on that question.
Thanks, Penny. So at Block, our parent company, economic empowerment is what fuels all of our products. And empowerment around the ownership of your personal data is a really important part of how folks define their financial lives. And so we are very supportive of there being clear rules of the road for industry on how individual consumers are able to move forward with their personal financial data rights.
Great. And Raul?
So this is one of the most important rulemakings for the financial services industry and fintech in specific that has come down in a very long time. So we're thrilled that we seem to be approaching the finish line. For us, we believe that consumer portability of data across institutions is absolutely critical and should be made very widespread as long as it's put into a digital safety construct. For us, our consumers specifically benefit from being able to import their financial data into our engine to allow us to give them better financial advice. So very simply, they can end up doing better if we are able to help to comprehend more of their financial lives. So we think this is an absolutely critical rulemaking, and we're thrilled that we're getting close.
Indeed. We all are. Sarah?
Yeah, we would agree as well, too. We think it's a very critical rulemaking. And, let me first address what we would see without a 1033 rule in place. Without a 1033 rule in place, our customers have varying experiences and different benefits depending on how their bank manages their permissioned access by third parties. We fully support a 1033 rule that establishes consumers and small businesses to have access and control over their financial information. This provides them with the ability to easily use third-party financial products that best meet their needs and circumstances, as well as these needs and circumstances change. Second, we need the rule to address protections such as privacy, cybersecurity. Consumers and small businesses, as well as financial institutions, need assurances that third parties that are accessing their financial information are going to protect that information and only use it for the purposes that they've been consented to. And finally, we need to make sure that the types of financial information that are covered by this rule and how third parties can access that information once they have the consumer consent. Bank accounts and credit card data provide a really great understanding to start understanding one's financial health and one's financial picture, but we need more. Consumers need more access to that financial information, such as like mortgages, pensions, student loans. So we echo Raul's remarks. We are thrilled to be moving forward with this rule.
Great. Let me open it up for the audience. Is there anybody that has a question in the Q&A, or put it in the Q&A and we will try to address it? This one is, and so thank you, Adam, for this question. On the impact slide, bullet number 4, and this is probably for Abby and Ben, reduced fear and stress. Any insight on the type of concerns consumers are fearful of? Does bullet number 4 capture consumer sentiment on security of payment transactions and or custody of assets by newer non-bank fintechs?
Sure, happy to take this. So I will point everybody, and I think in the readout from this webinar, we'll share information about where to read the fuller report, where we do dive deeper into the underlying data, including enumerating what are those fears and concerns. I think for a lot of people, it's missing payments, it's not being able to make ends meet. But I think, Abby, correct me if I'm wrong, we go into like probably a dozen or so specific concerns that consumers have, especially in our 2022 report, which is sort of against the backdrop, June, July of 2022 of real economic uncertainty. In terms of security of transactions and custody of assets, we have the ability to slice this data in any number of ways, including according to use case. So I don't know that we pulled that out specifically in this report, but we're always happy to go back into the data and analyze it further. So that's a great call out, and we would love to hear more from you.
Great. A couple more questions coming in. Thank you, Andrea. How do traditional financial rails, i.e. credit cards, debit cards, fit into your goal of providing holistic financial solutions to your customers? Anybody? I would say that many, I can answer it just a little bit, and maybe others might have another question as well. But this is, there are partnerships within banks that we use to be able to enhance their digital products. Also, there are different products that are being payment from credit cards, debit cards, and others. So it is a holistic sense to be able to allow consumers the ability to have either the payment products in which they're choosing from, the ability to use and enhance what their existing products are, and to be able to use the bank partnerships and others to be able to enhance that digital wherewithal, the expansion of digital products as well. Next question. Is it too early to talk about open banking and customer data, customer data sharing will look like? Can I move my data from Cash App to Betterment to Intuit? Anyone? Raul?
Well, first of all, I don't think it's too late to look at a potential end state. And I think the group that's assembled here is cautiously optimistic about a great end state. We certainly do our level best to make sure that money movement is very smooth. And what we do find is that the bulk of our consumers are also simultaneously using a range of other financial tools, whether that's a TurboTax to finish up their year-end needs, other finance and payment apps simultaneously, like a Cash App, and being able to sort of discreetly and easily move their money and their information between these apps. So, so we work very hard to make sure that our off and on ramps, are smooth and frictionless.
Yeah, and I would just say just building on that, I mean, just looking at that end state, right, that goes back to the idea of consumers being in control of their financial data. We want to ensure that consumers are in control of this financial data, but as you look to move that, you have those partners with those privacy protections that are in place. So we want to make sure that you have control, but you also have those standards that are in place. And we want to expand that, right, to look at the types of data so that consumers ultimately can be at the center of their finances so that they can make the best decisions possible for them. So I love the end state, but I also love the push for how we get there and set those guardrails around that to once again be the best stewards of our consumers' data.
Great. We have time for one more question. And this actually is a little bit broader. Is the industry doing anything to educate lawmakers, Congress, about upcoming financial products? I can tell you that we have been on Capitol Hill. There is a hearing tomorrow that we will be testifying on kind of not only open banking, but also the data privacy protocols that need to be placed. Do they need to be modernized? Do they need to be updated? So we do spend a lot of time, and I won't speak for every member company, but I know all of us spend a lot of time educating lawmakers, policymakers, staff, regulators, and others, so they have a clear understanding about what the products do, what they don't, demystifying some of them, and giving them a better example in real practical terms, how a consumer might interact or how a small business might use them as well, and giving them the use case scenarios as well. So we do a lot of education on our behalf, but I don't know if anybody from the panel would like to answer that question as well.
Yes, we're looking forward to hearing Penny testify on behalf of the industry to talk about some of the really great work that we're doing in the fintech space. But we generally go to the Hill and talk about our issues and are open to talk about, anything that staffers have questions about. We understand this is a new and innovative space, so always open to questions and concern.
Yeah, and I would just say that too, just looking at the example, I mean, one, we do educate, and I view this as something that's a perpetual need and goal, right? Because I think it's really important to highlight not just, as we've spoken to today, the access, but the benefits of how we are actually living up to our mission of powering prosperity. And just pulling out that small business example that I cited before, we at Intuit, we have a QuickBooks Small Business Council. I think it's really important from policymakers, not just to hear from us as industry, but to hear from the actual small businesses and consumers that utilize our tools. So we're putting that into practice, and we're connecting them directly with policymakers so that they can hear directly from our customers.
I'm happy to wrap this up because I know that the question specifically also touched on crypto, which we know well. We launched a set of crypto portfolios last year, so we've been, through some of this. And listen, I mean, it has definitely had an effect on financial services in general and how people look at markets. I think it goes to the heart of what we're talking about today, which is that consumers, regulators, elected officials need information, need to be educated on how these products work, and need to understand their use cases within a portfolio or within the broader economy. Our feeling on crypto is that there is a place for cryptocurrency within a modern portfolio, and there are some very powerful use cases for it within commerce and industry. And we are going to continue to educate through the press, through this trade association and other channels to make sure that people have a chance to understand how these currencies really work.
Well, thank you, Rahul, but thank you to all the panelists and Ben and Abby for walking us through the Harris poll and seeing the trends and where the state of fintech is in the adoption and the use case and how consumers are interacting. Sarah Paul with Intuit and Amina Ross from Cash App and Rahul from Betterment. We really appreciate all of you all for being on the panel today. And thank you, the audience, for being with us today, asking various different questions. And we hope to continue and reach out to us if there's further questions you might want answered, and we will try to facilitate those as best as possible. But really appreciate everyone being here today. So thank you.
Thank you.
Thanks, Penny. Thanks, everyone. Bye-bye.
Bye.